Good morning, everybody. It's Tuesday, December 10th, 5:25 a.m. Central Time. Grain markets are mixed this morning. March corn futures down a half cent at 441 and a quarter. January soybeans up 2 and a quarter at 992 and a quarter. March Chicago wheat down 2.5 at 556 and a quarter. March Kansas City wheat down 3 at 555 and 3/4. March spring wheat down 2.5 at $6 and 3/4. We had some news out of Canada yesterday. Why don't we start there?
So, Canada is planning to retaliate if the Trump administration slaps new tariffs on Canadian imports. The warning from Prime Minister Justin Trudeau comes just weeks after Trump announced a 25% across the board tariff on Canadian imports in an effort to reduce the flow of migrants and fentanyl into the U.S. Back in 2018, Canada responded to Trump's tariffs on Canadian steel and aluminum by imposing tariffs on products like bourbon and Harley-Davidsons. The tariffs were effective, leading Trump to remove them. A 25% tariff would damage the Canadian economy. It would also raise the cost of many Canadian products that the U.S. imports. Canada is the largest market for U.S. exports, with 36 states relying on it as their top export market.
Given that this is a grain market show, we're going to talk about grain exports or ag products to Canada. So here's your list here. And if you guys are listening and not watching, I'll read them to you. Canada, current marketing year, accounts for less than 1% of U.S. corn export sales. Canada accounts for less than 1% of U.S. soybean export sales, current marketing year. Canada accounts for less than 1% of U.S. wheat export sales, current marketing year. Here's where it gets slightly interesting. Canada accounts for about 10% of U.S. soybean meal export sales for the current marketing year. Canada accounts for about 7% of U.S. soybean oil export sales for the current marketing year. And Canada accounted for 45% of U.S. ethanol exports in 2023. And we don't have full 2024 data this year. It's going to be down a little bit, but that's a substantial number. The ethanol piece is interesting. Of the ethanol that we produce in the United States, we export about 9% of it, and Canada would account for slightly less than half of that. So ethanol exports potentially an issue. The items that I did not list here were beef and pork. Those are substantial as well. Canada accounts for 7% of all U.S. beef exports and about 11% of U.S. pork exports. So when it comes to corn, soybeans, and wheat, there's not much to be concerned about. But the soybean products, something to be concerned about. Ethanol, I think, would probably be the biggest one. And then beef and pork, maybe second to that. So I don't know. I feel like Trudeau has said several times, like he doesn't want a trade war. Now he's talking retaliation. I don't know. I think that these stories are going to continue to see new headlines. I think there's going to be some negotiation prior to Trump's inauguration would be my guess.
USDA will release its monthly crop production report today at 11 Central Time. Traders expect minimal changes to the U.S. grain balance sheets. Some believe that USDA will increase its demand projections for U.S. corn via exports, ethanol, or both, while others believe that they will kick the can down the road. USDA will wait until January to make any sort of adjustment to the size of the 2024 U.S. corn and soybean crops. While weather in South America has been mostly favorable, it's probably too early for changes to current crop projections.
Looking at the ending stocks projections or average trade guesses for today, the trade on average, according to this is the Reuters poll, expects a slightly lower U.S. corn ending stocks projection. This would be the amount of corn left over on August 31st of next year. They're looking for a 32 million bushel reduction, and that would be on the assumption that USDA is going to come up with either exports or ethanol or perhaps both. And I have made the argument that both of those numbers are too low. But USDA could wait. They could wait a month. They could wait a couple months. January is the bigger report. Soybeans, no major changes expected. I don't have any reason to believe that the crush number comes up. I don't have any reason to believe that the export number comes up. I think they're fair. Same thing with wheat. We're not really looking for much on the global balance sheets, even though Brazil and Argentina appear to be in pretty good shape. I don't know that USDA is going to come up or really do anything with those estimates this early. I'll be curious to see if they do anything with Russia. We've had all this talk about Russia and the problems or maybe lack of problems. There's a lot of controversy, it seems. See if they make any adjustments there. Could be some adjustments to the import forecasts. You always look at the China import forecast for corn and soybeans, those sort of things. So maybe a few changes here. But this report, all in all, December WASDE is typically not a big deal.
Soybean planting in Brazil is nearing completion. According to well-followed private group Ag Rural, as of last Thursday, Brazilian farmers had planted 95% of the total expected soybean area, up from 91% the prior week. During the same week last year, 91% of the crop had been planted. Favorable yields are anticipated across Brazil as major soybean producing regions have experienced timely rainfall and continue to benefit from consistent precipitation.
The soybean bulls out there, there's very, very few of them. The soybean bulls out there would like to see a drought forecast for a week or two in Brazil. You just haven't seen it. This map looks exactly the same almost every time I show it to you guys. It's rainfall for the next 10 days, and it's just rain, rain, and more rain. They have had excessive rainfall in some areas of southern Brazil, but now it looks like they're going to dry out in those far southern areas. So there's just no major crop issue. You could look at this precip as a percentage of normal forecast and say, oh, wow, Mato Grosso is going to be drier than normal. And it is, but it's not totally void of rain. There's going to be rain there, and I think it's going to be adequate. That seems to be the opinion of the marketplace, at least, which has just been very lackluster in action.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
I mentioned this one yesterday. I'll mention it again today. ROI trends and budget update with Chris Barron. We talked about corn and soybeans. Chris ran through a bunch of data that he has from his customer base, which is their farmers all across the country, and it's aggregated. And he showed us, the average budgets, the average ROIs that we're seeing for this year, and also the projections for 2025. What percentage of the crops do these guys have sold on average? A lot of super interesting stuff here. We know that there's a lot of red ink on the farm budgets, both for this year and the projections for next year. But Chris got really specific. He had some really good charts about ROI trends on the farm over the years and how we tend to kind of cycle through these sort of things. Yesterday, Pete Meyer was on, and we did a thorough balance sheet review of the U.S. corn and soybean balance sheets. We looked at current marketing year 24-25 and looked at some possible adjustments, maybe some best case scenario type stuff. Then we looked at 25-26. We took the early baseline projections from USDA. They were out in November, and we poked a whole bunch of holes in it and tried to come up with what we thought was realistic. There's actually, I think, that what could be a pretty big sea change in 25-26 with relation to corn versus soybeans, which one's bearish, which one's bullish. There's a lot of things that could change. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. This thing, what we send out, is jam-packed with info every single business day. The morning email includes all of our headlines from that given day, all of our graphics. Our 6 most recent premium videos are included every single business day, and super easy to play on your phone. You just click and they play. There's no login instructions or anything like that. As I've said before, we're not going to sell you anything else. There's no upsell. There's no hidden fee. We'll never call you. We'll never give out your contact info. We just want to send you all of our info. I want to send you my cash grain marketing recommendations. And that's it. I'll give that deal a shot today, guys.
The Russian wheat crop may not be in as poor of condition as originally reported. Last week, a Russian analytical group leaked data that indicated a record high share of the wheat crop was either in poor condition or had yet to sprout. Russian consulting group Sovicon reported that late November is too early to assess the crop because of increased temperatures. The rise in temperatures, which is linked to climate change, indicates that the crop is still growing and many plants, will sprout at a later date. Sovicon is still expected to trim its 2025 wheat production forecast of 81.6 million metric tons.
Got to be careful with that climate change talk. People are going to get upset.
Yep.
They get upset. I mean, the climate is changing. Is it because of us, or is it just because it changes? I don't know. In any case, we've been back and forth with this story about 10 times in the last couple of weeks, and the wheat market does not care. It just doesn't care. It doesn't rally. It doesn't really sell off. It's just kind of sitting here doing a whole lot of nothing. Very, very disappointing action, I think, given the at least idea that maybe the wheat crop's not that great in Russia. And they're, of course, the world's largest wheat exporter. You would think the market would care, and it doesn't.
U.S. soybean shipments declined last week. USDA reported that 60 million bushels of beans were inspected for export during the week ending December 5th. The print was down 23% from the previous week, but up 62% compared to the same week last year. Corn shipments were near the upper end of pre-report expectations at 41 million bushels. The print was up 10% compared to the previous week and up 45% versus the same week last year. Wheat shipments fell below expectations at 8 million bushels. The print was down 24% from the previous week and down 23% versus the same week last year.
Corn shipment number was very good. Soybean shipment number was very good. We are kind of on our way out of primetime U.S. soybean shipping season. That was a good seasonal print, though. It's pretty close to average. The corn number, which is well above the same date last year, would indicate to some that, yes, these global importers are front-running trade disputes, and maybe that's true, maybe it's not, but that seems to be one of the narratives that's out there. So nothing bad to say about this stuff at all.
Potential new tariffs and immigration reform could further constrain the U.S. beef herd. Drought, rising input costs, market volatility, and other factors have caused the U.S. beef herd to shrink to its smallest size since 1961. The historically low cow herd numbers have driven beef prices to unprecedented levels. The situation has also caused the cattle market to soar to all-time highs. If President-elect Donald Trump imposes tariffs that limit beef or cattle imports, beef prices could climb even higher. The tariffs could also send the cattle markets higher. Trump's planned immigration reform could further impact beef prices by raising labor costs for meat packers.
I'm not a cattle market person, but so is Trump supposed to be friendly to the cattle market, whereas he's perceived to be bearish the grain markets?
I don't think he's perceived one way or the other. I think as an industry, like, he was looked at as positive because overall for the economy, people look at him as being positive. Of course, there's all this talk about tariffs, but when we talk about limiting imports of beef or cattle, of course, there's the chance that that can send beef prices higher, but at the same time, that'll help our markets. So you could say it's a double-edged sword, but again, you have to remember that there's all this talk about tariffs. Is he really going to implement them? And how will the tariffs actually import beef and cattle here in the U.S.? You just don't know until any of this stuff actually happens.
Yeah, it's interesting to me. I know the cattle market has been strong. I don't think it's because of this, and the grain markets have done nothing, even though there's all the tariff talk, which is all extremely interesting. I don't know if it's wait and see or if it's just lack of interest because we're oversupplied in some of this stuff in grains, at least, and cattle just kind of does its own thing. I don't know. What did cattle do yesterday?
Cattle futures were mostly higher on Monday. Live cattle were 27 cents to 85 cents higher. Feeders were 2 cents lower to 67 cents higher. Box beef continued to climb higher. Choice ended the day at 314.14. That was up 210. Select ended the day at 279.34. That was up 261.
Outside markets are quiet this morning. U.S. dollars up just a little bit. Stocks are up a little bit. Bonds down a little bit. Crude oil is down 36 cents in the January WTI at 68.01. Remember, guys, report at 11 a.m. Central Time today. Have a great day. We'll talk to you on Wednesday.